Thank you. Your Excellencies, Your Highnesses, ladies and gentlemen, welcome back. I'm Lei, and I'm privileged to be joined by an esteemed panel. To my left, Sarah Al-Suhaimi, Chairperson of the Saudi Stock Exchange. Thomas Lembong, Chairman of the Indonesia Investment Coordinating Board. Boon Chai Lo, CEO of the Singapore Stock Exchange. And Jeremy Weir, Executive Chairman and CEO of Trafigura Group. Welcome to you all. Let me start by asking you, Sarah. We know that this is the local stock market, and that when it comes to emerging markets, emerging economies, capital markets, often the concern by global investors is that of state involvement. How do you reassure your global investors?
First of all, thank you very much for having me here. One of the themes of the FII is investing in transformation, and for sure the Saudi Stock Exchange has invested in transformation, especially in the last couple of years. This transformation is one of the main KPIs that the Stock Exchange have to implement Vision 2030, and it all is around what global investors need. So the process that we have followed is to stay close to investors. And we keep on communicating with investors. We have open channels. We have been doing this for the last couple of years. My colleagues and I travel around the world, meet with asset managers, asset owners, custodians, brokers, to understand their needs. One of them is access to
clear access.
Access to everything, access to the market, having more financial statements of companies published in English, and this is on top of our agenda. Encouraging our companies to have very active investor relations is one of them, and Tadawul, along with the regulator, the Capital Market Authority, has done a lot in that perspective, but also transparency and corporate governance, and also investor protection. All this with complete free flow in and out of the market at any time. And this has been evident throughout the time from the time investors have foreign investors have started investing in our market. In 2015, we had 0 foreign investors other than strategic partners. And today, we have 320 registered QFIs with a couple of hundred, almost a couple of hundred in the pipeline. And we expect more.
5%?
The whole foreign investment in the stock exchange is almost 5%, including strategic partners, yes.
Right.
Yeah.
So, Tom, to what degree do those comments resonate with the reform initiatives being undertaken in Indonesia?
Thank you, Cheng Lei. Yes, I'm very excited to be here, first of all. Personally, of course, I'm representing Indonesia, the number 16 largest economy in the world, at $1 trillion per year GDP, and also the largest Muslim population on the planet, with 90% of our 260 million people being of the Muslim faith. But I'm also here with my friend and colleague, Boon Chai from Singapore, representing ASEAN, the 10-member Association of Southeast Asian Nations. Together, we're 630 million people, $3.5 trillion GDP, with GDP growth rates approximating China's GDP growth rates, around 6%. And Sarah's comments on market opening and market reform resonate very strongly with us. In a similar spirit, we've also been deregulating, we've also been opening up. The Future Investment Initiative, of course, is a lot about technology and the fourth industrial revolution. We're enjoying a tremendous e-commerce boom in Southeast Asia. In Indonesia alone, we have as many unicorns or billion-dollar startups as there are in the entire European Union. And maybe one other thing that we can talk about in this panel given that we have two major stock exchanges, the Saudi Tadawul and the SGX, is how exchanges can play a bigger role in helping the capital markets. And then with Jeremy, Trafigura, one of the biggest commodity traders in the world, I think that's another big asset class that I think will be very important in the development of our capital markets in Southeast Asia and I believe also in Middle Eastern region.
For sure. So Sarah was talking about communicating with investors, finding out what they need, and Tom raised a good point about communications between regional stock exchanges because it's not a zero-sum game. So Boonchai, I want to ask about, you were telling me about the multi-asset trading trend that is very apparent at the SGX.
Yeah, so thank you, Lei. And yes, indeed, I share the comments made by Sarah and Tom. And indeed, the interaction between exchanges can indeed be mutually beneficial. So for example, we have seen airline alliances that really has changed the complexion of the aviation industry to the benefits of airline companies and more importantly, passenger. So likewise, I think a similar parallel can be drawn amongst exchanges. So for us, right in the heart of ASEAN, as Tom mentioned, a big grouping, young population, demographics in its favor, and technology traction gaining very rapidly. Access into Asia is paramount in the minds of many investors, and we do provide that access as a destination for investors investing into Asia across different markets, either through multi-asset on the exchange or through linkages that we forge with exchanges. And I think more importantly for any companies these days looking for funding, I think the exchange has to look at being able to provide that via private financing and not just the public market.
And unlike the interaction that we may see more of among the stock exchanges, for a trading house such as Trafigura, it's not quite the same, is it?
No, it's not. Trading houses typically, well, we use exchanges and futures exchanges to hedge our risk. That's often a misnomer about our industry. That's a high risk industry. Actually, the whole business is about how you mitigate risk. So we hedge all our exposures on multiple exchanges around the world, on futures exchanges, including in Asia, in Singapore, in Shanghai. And it's a very important part of our business. But the rest of the business is typically principal to principal business, but it's very large volumes. Last year our turnover was 135 billion. This year it's going to be probably close to 180 billion dollars. So it gives you an idea of the size and the magnitude of the transactions being done.
Sarah, let me bring it back to the impact of index provider inclusion, because recently we saw those decisions made by FTSE Russell as well as the MSCI. In terms of capital inflows, trading volumes, what has that done to the Tadawul?
Yes, and in the past few months, the announcement of inclusion of the Saudi market into all major indices, as you named them, MSCI, FTSE, and S&P has happened, with implementation to be expected in 2019. This comes as an outcome out of all the efforts that we have been doing. The inclusion to the MSCI Emerging Market Index and
just like
FTSE and S&P is a very important thing for the Saudi Stock Exchange, because we want to be closer to the world. We want to increase the standard of our companies and the corporate governance, and we have done all those things. The number of QFIs has been increasing, and we expect this to continue on and to lead up to the inclusion and after. And we are very active, and we welcome all investors to come talk to us, speak to the regulators, speak to the different companies listed in the market. One of the most important things to note as well is the inclusion of the Saudi Stock Exchange in the MSCI index gives an access to the Middle East. And another opportunity for global investors to diversify. Just to note, our stock exchange, our index has increased this year by almost 5%, I think as of close of yesterday, while the emerging market index was down by 16%. So we do have with the companies that are listed an opportunity for diversification. We expect that earnings growth for those companies this year will be 12%, next year 10%. These are really excellent results, and we are continuously working on this. There are other also developments that Tadawul has been that Tadawul announced, which is launching our future indices early next year, which will be our first derivatives market in 2019, while we are building our clearinghouse to have a full derivatives market that can clear all assets and guarantee them for investors as well.
Right, so aside from index providers, I also want to look at more broadly the role of global investors in emerging economies, capital markets. Tom, do you want to share with us the Indonesian perspective, the role of foreign investors?
Well, I think it's pretty clear that investing is only becoming more global at an accelerating rate, right? I was trade minister before I became investment minister, and in both positions, it's striking to me how far behind we regulators are, given the rapidity of the development in the capital markets, the regional integration, the cross-border flows, and I think now it's turbocharged by a revolution in fintech, right? So, for example, Alibaba, simply by converting the balances in e-money accounts, right, into a money market fund product, within 4 years went from zero to running the largest money market fund in the world, $170 billion Yubao money market fund, right, bigger than JP Morgan's money market fund. So the speed with which these things are going now. And just to share from a Southeast Asian perspective, Alibaba, WeChat, WeChat Pay, other fintech providers are now coming to Southeast Asia, to ASEAN, right? So I think the globalization and regionalization of finance poses fresh challenges to policymakers on the investing side and in capital markets.
Do you feel that turbocharged speed at the SGX?
Yes, certainly. I was going to echo that in terms of the presence and participation of international investors are important, but they do complement domestic, institutional, and retail investors. So just taking ASEAN or even Asia as an example, a fund manager investing into Asia will have access to individual exchanges, individual markets, but at the same time, because of index inclusion, and congratulations to Saudi Arabia and for Tadawul, I think that's an important event. Investors will then also look towards hedging some of those exposure, and that could be through futures. And at the Singapore Exchange, we do provide that. And also increasingly, investors look towards Asia not just as a block, but as single country investment. You pick the country, you form a macro view, you then decide on which asset class to best express that view, and that's important for exchanges to collaborate, and multi-exchanges will play that role.
Jeremy, I want to ask you about China. I mean, I've been covering the Chinese markets for the past 17 years. You say you've been in China for the past 15 years. As a foreign investor in Chinese markets, what advice would you give to regulators?
Well, in fact, we've been operating in China for 25 years since the
company.
There you
go.
So quite a long time, and seen a lot of changes in that period. And to give you an idea, it's roughly represents approximately 25% of our turnover. So it's a big part of our business in the minerals and metals and bulk commodity space, but also increasingly so in oil and LNG. We have we have a wholly owned subsidiary of foreign-owned enterprise which enables us to import, export and trade domestically. It's been a very significant part of our business. And we operate...
Were there not growing pains?
Look, there are always growing pains. I think, and I think what has been very interesting is sort of how the if you like, credit policies within the country have changed, how we've been able to adapt to those changes in credit policies, how regulation has changed and scrutiny has changed, all for the better. We're a very active participant, for example, on the Shanghai Futures Exchange, the Dalian exchanges for iron ore hedging and steel hedging. So these exchanges are extremely active, extremely liquid. They have a high degree of speculative influences within them, but they're still used for physical pricing mechanisms. So it makes it a challenge, but it does provide liquidity to execute our business properly. And we expect to see further development in those exchanges. We're seeing options markets developed in other areas. I should also add from the capital markets, what is interesting is that we're starting to use the capital markets in China. We were the first, I believe, one of the first foreign companies to sort of execute panda bonds. We executed, I think, a tranche of something in the region of $2.3 billion RMB this year. It's a new thing for us, but again, it just shows the development of those markets.
Right. And Sarah, how do you see the future role of Tadawul in the global economy?
Tadawul today has very serious ambition of becoming the stock exchange of the region. We are today almost 50% of all GCC markets in terms of market cap. We are more than 70% in terms of liquidity. So we have a very liquid market that can be attractive for companies in the region. Today, any company can cross-list in Saudi Arabia, and we're working with the CMA, the Capital Market Regulator, to finalize foreign listings as well. And I think being in this very attractive geographical spot in the world, we can play a very big role in global investing.
Now, when it comes to market capitalization, when I started looking at Chinese markets, I think market cap of all mainland stocks was about 4 trillion. I think it's now something like 50. So it's got up about 12 times in the past 16, 17 years. But that's not to say that the market has become stronger. And in fact, you'll notice that whenever there's market volatility, and I think that's something a lot of the emerging economies, the markets experience, that you tend to have this implicit guarantee that the national team will come in and shore up, if not the markets, then sentiment. Your thoughts on that, Thomas?
Well, at the risk of stating the obvious, capital markets in the developing countries are still developing, right? Clearly, we don't have the maturity, the institutional maturity yet that one would expect from the advanced economies, capital markets. On the other hand, there's a lot of positives to this nascent stage of development. Jeremy might chime in, but I believe that volatility is great for traders, right? For trading. Actually, one thing that people in the developed markets have been complaining about over the last 2 or 3 years is lack of volatility. They're unable to trade any trend.
Jeremy, do you agree?
I think, well, we're starting to see increased volatility now for sure, due to many different factors. I would argue probably if you like, 2 years ago and 5 or 6 years prior to that, actually volatility was relatively low, except for one-off events.
Right, but beyond that, Cheng, I think the nascent nature of the developing markets, capital markets, is an opportunity to get in on the ground floor, right? To get in when it's still early. You mentioned China going from 4 or 5 trillion to 50 trillion. So imagine if you were an early investor to that trend. Clearly, that would have been a very profitable position. Now, I think that story is about to be repeated with Saudi Tadawul, with ASEAN, with commodity markets, potentially new innovations that open up commodity investments to broader audiences. So all these young or nascent markets, in my view, are actually a tremendous opportunity. And thank you for giving that perfect illustration of what China has done over the last 15 years.
But I think, Leah, it's also an evolution. If I just look at the Asian markets 2 decades, 20 years ago, it was really only the equity market and the banking market. There wasn't even really a debt or fixed income market to talk about. Today, that is a thriving debt market that complements private equity, venture capital, and also infrastructure financing. So I think it's an evolution, it's a journey that each country, each market takes on, and as it opens up with more and different type of investor participation, it's just a natural progression.
Well, on the subject of nascent markets, you also have a second board, Catalyst, but volumes are down, and only about 9 out of 114 Catalyst listings have made it onto the main board. So, you know, are easier IPOs the way to go for stock exchanges?
Well, each of our boards, there are 2 boards, the main board and the Catalyst, serves different purposes. The Catalyst board serves fast-growing companies where they're looking to expand rapidly and thereby requiring more proceeds, more capital raising. And just to illustrate, Catalyst companies could raise a greater percentage of proceeds compared to the market cap. So it requires market understanding, but allows them to rapidly scale up as they grow beyond Singapore.
Jeremy, I want to ask about competition, because a lot of the trading arms of the national oil companies, including Saudi Aramco, are now starting to try to eat some of your lunch.
Look, it's a very big market out there across many different commodities. And the commodity companies vary in terms of their skill sets and what their objectives are. We're also seeing actually some of the large mining houses also involved in trading as well. So it's across the entire spectrum. But you know, as I said, there's a big market out there. I would also say we're living in a very different world. Despite the increased volatility, we're seeing margins under pressure. And so through that process, you have to be extremely efficient in terms of managing the risk associated with that business. For that, we've invested enormous sums of money in IT to ensure that we have efficiency. We close our balance sheet every day and have risk reports every day. It also swells your balance sheet because you've obviously got to provide financial solutions to customers. So that's providing financing solutions. That's a challenge. And I would also say, you know, in today's world, in commodity worlds, particularly when tariffs, sanctions, and other extraordinary events are taking place, you're seeing unnatural flows of commodities, quick decision-making processes are required, and through that you need an entrepreneurial spirit within organisations. I'm not saying that's not possible in large NOCs or in other companies, but you just need a certain culture to be able to adapt to that environment. And so therefore there's many challenges, a lot of competition, which is why we are gravitating towards sort of big global scale players in our field.
Okay, and to be leaner and meaner.
Yeah, lean in terms of people potentially, but I think it's more just you have to be very reactive to market conditions, and you have to understand what the risks around those changes are. And it's not a simple process of buy here, sell here, and make a margin. That business has been gone for many years. It's about looking at arbitrages and providing services through the whole supply chain.
Sarah, getting back to the question I posed to Thomas about, you know, do you actually go in and intervene in the market when there's volatility? What's been your observation?
Today, all the ownership of the market is announced by Tadawul, I think on a weekly basis or a monthly basis. And we have almost 80% of institutional investors. You need to note that the nature of Saudi investment in the market is of a long term, whether they are institutions, family offices, individuals. Some individuals, yes, do trade. They are by number the largest, however, they are not the largest in holding. And also, as of today, most of the foreign investment is also strategic partnerships. So these things are announced, then I think investors buy whenever there is an opportunity. And we have been seeing every time that there is volatility, there are long-term investors who come in and buy and bottom fish and look for opportunities as well.
Tom, you were mentioning before the boom in e-commerce in Indonesia. Do you think the capital markets have served these startups, these Alibabas of the future, well?
Well, yes, but the good news is probably a lot of the capital markets activity is still ahead of us. As many of us in this room know, we've had an unprecedented boom on the private market investment, right? Private capital, and startups are staying private longer than ever before. This morning in the opening plenary, Saudi Public Investment Fund, Mubadala, others commented about investments they made in Uber, right? The scale of venture capital investment is so huge, it's enabling companies to stay private longer. But the good news is they eventually will come to market, they eventually will IPO. And I think what I would urge companies to investigate is multiple listings. So for example, could they, list either directly or indirectly on Saudi Tadawul, right? When they do go public, I think a broader reach and potentially broadening beyond the traditional listing venues such as NASDAQ or NYSE, tapping a broader audience of investors around the world, I think will be key to get this boom, to keep this boom going.
Is that part of SGSX's strategy as well, encouraging multiple listings?
Yeah, so I think the private financing complements the public market. So even for the Singapore Exchange, we are investor in a private fundraising platform because we do believe that they complement each other. And also for the initial investors, eventually they will need a liquidity event. And that could be either via an IPO or it could be via another private round in the secondary market. So we see that complementing that to each other. But I think more importantly, within the context of ASEAN, Southeast Asia, if you are a technology or fintech company operating in one of the 10 markets in ASEAN is different from another market. And thereby being listed across not just one, but 2 or 3 exchanges across ASEAN provides the company with investors who understand how each market works. And I think ride sharing is probably a good example in ASEAN because the rules and regulation around that, the industry is very different in each country.
And Jeremy, as a global investor, how much sway do you have over emerging economies' decision makers about the direction of their markets?
When we look at investments, often some of our investments are private, not necessarily listed, so but some of them can be listed. And that process is obviously, it's an economic process, but you have to engage with stakeholders throughout the entire investment process. So that's from the environmental impact, the local communities within which you operate, and other areas. And we have investments in Colombia, in Africa, India. So it's very, very different across the board. But to me, there's a constant theme is sort of transparency and engagement in terms of how you look at the investment process to ensure the success, because it's not just, if you like, a financial aspect.
Okay.
Lei, if I may,
of course,
there's one issue I did want to make sure to raise, and that is actually the currency issue.
Yes.
Right.
Don't I know it?
Thank you. So we in Indonesia, just 2 weeks ago, hosted the annual meetings of the IMF and the World Bank in Bali. And one very active policy discussion that took place during those few days was the threat posed to the world economy from the world's overdependence on the US dollar, right? At a time of rising US dollar interest rates and shrinking US dollar liquidity, it makes it all the more urgent that the world diversify our trade, investment, and even our tourism to other currencies, such as the euro, the yen, and of course the big one would be the renminbi, right? And actually I see that as an important role for the regional exchanges such as SGX or potentially Tadawul, Sari Tadawul. One thing which regional exchanges have a natural advantage versus local exchanges is foreign currency denominated instruments, right? So the local exchanges like IDX Indonesia, we're not geared to issue bonds or securities in currencies other than our local currencies. Yet at the same time, we do have a lot of hard currency generating companies. We earn a lot of euros selling palm oil to Europe, or we earn a lot of renminbi exporting to China. And actually, it's really urgent from a policymaker perspective that we start changing our habit. We're so habituated to borrowing in dollars, issuing instruments in dollars. At a time of rising dollar interest rates, that's a really bad idea, right? And again, the natural listing venue to list our euro-denominated securitizations, our renminbi-denominated instruments, are regional exchanges such as SGX in Southeast Asia, or potentially Tadawul, Saudi, or Dubai in the Middle Eastern region.
Actually, in that regard, at our exchange in Singapore, our listed stocks, listed companies, actually we allow the companies to issue in 5 different currencies if they want to. And in fact, almost 40% of our companies are from outside of Singapore. And thereby having different currencies is even more important. And half of their revenues, half of the listed companies' revenues are again outside of Singapore. I think it talks to Tom's point in terms of multi-currency capability, and I think that's an important one.
Perfect time for Sarah to jump in. You have a currency peg.
Yes, we do.
Is that always a good thing?
For us, it is obviously a good thing. It depends on each economy and how the economy works. We sell oil, and we sell oil with dollars. We deal with a lot of companies with dollars. So for us, maybe we have a different set of circumstances than other emerging markets, which makes us excellent to complement the emerging markets indices, and again, a diversification of other markets.
Do you want to come in on this, Jeremy?
We trade, most of our trading is done in dollars, although we do have obviously renminbi-denominated business as well. I would very much welcome more sort of diverse currencies. I think the problem is that international trade is based in dollars at the moment. It may address some of the issues of implementation of sanctions as well, which is obviously a topic of conversation. But I think the other risk for companies which have diverse currency exposure is obviously the translation cost, not only just the funding cost, but also if you're running US dollar balance sheets and try to manage this volatility that we're seeing at the moment can be very expensive and at times.
Sarah, I want to talk about something more specific to the Saudi Stock Exchange, which is that you have a KPI of increasing all your financial statements and other information disclosures for listed companies to 100% English, up from the current, is it 20%?
Almost maybe 20%, but we need to note that the larger companies, which comprise the majority of the market cap, are issued in English. What we're doing with the Capital Market Authority is we're conducting investor relations workshops for Saudi CEOs and Saudi CFOs to understand the importance of investor relations. And we have seen it evidently in many of those companies how much they benefit from having foreign investor participation, which makes them more open to issue their statements in English. We obviously we want to reach 100%. Yes, that's what we're working for. We realize it's going to take a little bit of time, but we're staying close to the companies, as close also to the investors, and trying to bridge this gap.
Thomas, is that an issue in Indonesia with disclosure and also in terms of maintaining good investor relations?
Absolutely. Clearly, there is a language barrier, right? And that's probably another natural advantage that regional exchanges will have over local exchanges, quite frankly. That's why I think we, among policymakers, also still have a lot of homework to do to change our mindset, right? To socialize amongst ourselves that local exchanges and regional exchanges are complementary, right? They're not so much competitive against each other. They're actually very complementary to each other. And I think language barrier and the greater prevalence of English language info memos, disclosures, filings in the regional markets would play a big role.
Great. On that note about regional alliances, I'm going to wrap things up. I want our audience to thank our wonderful guests. We've got Sarah Al-Suhaimi from the Saudi Stock Exchange, Thomas Lembong from Indonesia's Investment Coordinating Board, Mr. Boon Chai Loh, the CEO of the Singapore Stock Exchange, and of course, the CEO of Trafigura, Jeremy Weir. Thank you so much, and thank you for being a wonderful audience.